Friday, October 24, 2025, saw a bearish U.S. stock market. The U.S. stock market closed higher today. Lower than expected inflation data fueled expectations that the Federal Reserve would maintain its interest rate cuts to support the U.S. economy. Expectations that the Fed's accommodative policies would boost corporate earnings also drove the market. Since the U.S. government shutdown began, few economic indicators have been released, leaving investors in the dark. Against this backdrop, the market was relieved when core inflation recorded its lowest increase in 3 months. Specifically, the September Consumer Price Index rose 0.3% year-over-year and 3% from the previous month, while the September core CPI rose 0.2% month-over-month and 2% year-over-year. The market was already expecting a Fed rate cut next week, and this CPI report confirmed that the Fed has ample room for further cuts in December. However, Bahakga noted that the ongoing government shutdown likely prevents the release of October inflation data. The market is almost 100% pricing in the Fed's 25 BP rate cut next week and the additional cut in December. With the October rate cut fully priced into the market attention is now focused on further rate cuts and the end of quantitative easing. The money market has already been warning for weeks that the quantitative easing process may be nearing its conclusion. Wall Street predicts that market stress signals have become so strong that the Fed may have no choice but to suspend QT as early as this month. The market's attention is now focused on next week, which includes earnings reports from big tech and the U.S.-China summit. The earnings releases of 5 of the Magnificent 7 companies, Meta, Microsoft, Google, Amazon, and Apple, are drawing particular attention. Meanwhile, ahead of the U.S.-China summit, Finance Ministers Scarpe Kissent and He Liu and Chinese Vice Premier He Lifeng held trade talks in Malaysia. This is seen as laying the groundwork for the summit between President Trump and President Xi Jinping scheduled for next week. The market reacted largely dismissively to President Trump's announcement that he would suspend trade negotiations with Canada. Trump had declared the suspension because Ontario had used an ad featuring former President Ronald Reagan criticizing tariffs. The ad, which Trump labeled fake, quoted a radio address from April 1987. The Ontario Premier subsequently announced that the ad would be suspended after this weekend's World Series to allow trade negotiations between the U.S. and Canada to resume. Interactive Brokers Joe Soteris noted that the market is rallying on the lower-than-expected CPI, with investors banking on the possibility of rate cuts this year and next. Glenn Madd's Jason Fried noted that as long as upcoming data continues to signal that employment risks outweigh inflation risks, the government's policy path is likely to point to further easing. Morgan Stanley's Ellen Zenter said the CPI report reaffirmed a trend broadly seen in private data during the government shutdown. BMO Capital's Ian Renser said the overall inflation figure confirms a 25 basis point rate cut next week, making it likely the Fed will signal a more cautious approach. Citadel Scarf said the U.S. stock market is poised for a strong year-end decline, driven by a combination of seasonal bullish factors like corporate share buybacks and strong demand from individual investors.